What if there was like a shortcut to really getting complex topics, those aha moments, but without feeling like you're drowning in data?
Well, that's pretty much what we aim for here on the deep dive.
Exactly. And today, we're plunging right into the Q1 FY26 earnings call for Quality Power Electrical Equipment Limited.
Yeah, the transcript itself is our source material, so it's a direct look, unfiltered, into how a company at the real cutting edge of global power infrastructure is doing.
And our mission for you, our listener, is pretty clear. We want to unpack the key business segments really driving their performance.
Right, and understand that broader industry outlook, what's causing this huge demand. We'll also gaze into the future outlook for the power sector itself.
And crucially, identify the key risks. What challenges are they juggling while riding this wave?
It's a fascinating world, high voltage power, lots to unpack.
Okay, let's get into it. So starting with the headline numbers for Q1 FY26, Quality Power had, well, a remarkable quarter.
Remarkable is putting it mildly. Consolidated revenue more than doubled year on year.
Yeah, it jumped from 80 crores to 194 crores. And just for context, a crore is 10 million Indian rupees. So we're talking, roughly 9.6 million US dollars up to over 23 million in 1 year.
It's a huge leap.
Astonishing. So, okay, let's unpack this. How did they manage that kind of growth? What are the different pieces of this electrical puzzle?
Well, the first thing to grasp is their core business.
Yeah.
High voltage electrical gear and these advanced power quality solutions. It's a very specialized field.
Right.
And they're not just in a good market, they're in a sector seeing what looks like a structural long-term demand surge. It's not just a blip.
What's driving that surge?
It's things like grid modernization globally, integrating all the new renewable energy sources, the massive needs of digital infrastructure like data centers, AI. It's all converging. And a key point demand, especially for their really advanced products, is actually outstripping supply right now. It's supply constrained.
Okay, so that puts them in a strong
A
position.
very strong position.
So with that backdrop, can you break down the main business segments? How did each one perform?
Absolutely. Let's look at the pieces. First, you've got Quality Power standalone, their core coil products business. It delivered a historic AITA margin.
ITA margin. Remind us.
Profit before tax, interest, depreciation, and amortization. Basically, a measure of raw operating profit from sales, and they hit 34%.
34%. That's huge for manufacturing, isn't it?
It's phenomenal. Their highest ever. It shows incredible efficiency. This part contributed 41.8 crores in sales for electrical equipment, and it's running at very high capacity utilization.
Okay, running hot. What else?
Then there's NDOC. It kept up a really healthy margin too, 27%. Seems like good operating discipline and a solid pipeline of projects there. NDOC brought in 91.91 crores in sales, a big contributor.
Got it. And the third piece, Mehu, the recent acquisition.
Right, Mehu. This is interesting. It showed a 45% increase in its operating margins over the last year, hitting a 9.5% EBIT margin.
EBITDA. Earnings before interest, taxes, depreciation, amortization. So a good measure of operational cash flow generation.
Exactly. And what's really telling is that Mehu's profitability jumped 47% in its first full quarter after Quality Power took over.
Wow. So they integrated it really effectively, really quickly.
It suggests they know how to do this, yeah. Like, they have a playbook for acquisitions, which is powerful. Mehu added 61.5 crores to the total revenue.
Okay, that Mehu integration, that feels like a key point. It's not just buying growth, it's improving it.
Yeah.
So here's where it gets really interesting. What does Mehu mean for their future? Capacity, margins, where does it fit strategically?
Great question. So Mehu is already running near full capacity, about 95%, but they're not sitting still.
Expanding.
Yep. New ovens, factory expansion. They expect this to boost Mehu's revenue by 20–30% in the very next quarter.
Yeah, quickly.
Apparently so. And longer term, the target for Mehu is mid-teens margins, maybe around 15% EBITDA within the next year or so.
And its total potential.
They think the current setup, once fully optimized and expanded, could handle maybe 450 to 500 crores in annual revenue. Significant potential there.
Okay. And overall financial health, beyond the segments.
Very strong. Cash flows are robust, letting them invest in growth without hurting profits. Group debt is super low, just 13 crores against 250 crores in cash and equivalents.
Lots of flexibility then.
Tons. And they have a big order backlog, 775 crores, which they expect to fulfill over the next 12 to 15 months. That gives great visibility.
Right, predictability. Okay, so strong numbers, good integration. But beyond the quarterly performance, this deep dive also hints at some, let's say, Shrewd strategic moves. What are they doing to future-proof to secure their position?
Good transition. Yeah, there's some key strategic plays. One big one is acquiring Sukru Electric. They did this through a joint venture with Yash High Voltage Limited.
Syncro Electric, why is that important?
They called it a great gem and a value buy. Basically, it gives them direct access to hundreds of transformer manufacturers in India and globally for specific product lines like instrument transformers and composite products.
Interesting. But why a joint venture? Why not just buy Sucru outright? Seems like they had the cash.
Ah, that's the clever part. It seems to be about management focus, about preserving bandwidth.
How so?
By doing a JV, they avoid getting bogged down in the day-to-day of Sucru. This lets their core management team stay laser-focused on the really high-growth, high-profit areas, HVDC and FACS-CTS.
Okay, remind us quickly, HVDC and FACS-CTS.
Sure. HVDC is high-voltage direct current. Think super-efficient long-distance power transmission. FACS-CTS are flexible AC transmission systems devices that improve the quality and control of power on the AC grid. Both are critical for modern grids, especially with renewables.
Got it. So the JV lets them leverage Sucru without distracting from those core priorities. Yeah.
Exactly. And Sucru has a 70-year brand legacy. The plan is to use that brand to potentially consolidate even more transformer component companies, strengthening their whole value chain position.
Smart. What else strategically?
Huge investments in tech, global approvals, manufacturing quality. This isn't overnight stuff. This is groundwork paying off.
Like what specifically?
They're now approved suppliers for HVDC and STATCOM products. STATCOMs are another advanced power quality device with all the big global players, even Chinese OEMs.
All of them. That's significant access.
Huge. It opens doors for long-term roles in global grid stability projects. They actually mentioned they're close to announcing some key HVDC orders.
Any examples of their tech prowess?
Yeah, they landed a really prestigious order with Hitachi for Power Grid India, a 500 kV HVDC smoothing coil. It's one of the world's largest. Think of it as a massive filter for ultra-high voltage power. Building that is a major achievement.
Wow. Okay. Any other major investments?
They're building a new factory in Sangli, a big one focused on global quality standards, potential peak revenue, somewhere between 1,500 and 2,000 crores.
Huge potential scale up.
Massive. Right now, they're staffing it up, sorting out raw materials, getting it ready.
We also saw something interesting about an investment in a company called Nebeski. Seemed tech-focused, maybe beyond just manufacturing. What's that about?
Good catch. Yeah, they increased their stake in Nebeski. It's an IoT, Internet of Things, and embedded systems company.
So sensors, connectivity?
Essentially, yes.
Mm-hmm.
They describe it as their in-house product lab and tech center. It's crucial for digitizing high-voltage equipment, turning analog signals into digital data for these next-gen smart grids.
So connecting the physical grid to the digital world.
Precisely. And other critical R&D, it's their bet on the future of connected power infrastructure, staying ahead of the curve.
Okay, that makes sense. Let's zoom out now. Connect quality power story to the bigger picture. They keep mentioning this structural long-term demand surge. If we look at the industry outlook, what's really driving this? Why now?
Right. The industry context is key. There are a few massive drivers converging.
Yeah.
First, as we touched on, grid modernization and integrating renewables.
Okay.
The growth projections for HVDC and CTS are just staggering, like 60–70% growth projected for the next 3 to 5 years.
60 to 70%. That's explosive.
It really is. And the critical thing now is that these technologies are becoming compulsory for new renewable energy connections globally. It's not optional anymore.
So it's baked into the system build-out.
Exactly. It's foundational infrastructure now. That provides a very strong, predictable demand floor.
Okay, what's driver number 2?
Digital infrastructure.
Yeah.
Think AI and EVs, electric vehicles. The power demands are just different.
How so?
Well, they gave an example. An AI search uses apparently 9 times more power than a standard Google search, 2.7 watt-hours versus zero 0.3.
9 times. Wow.
And EV charger, the fast charger, say 125 kilowatts, is way more power hungry than an average home's usage, maybe 3 kilowatts in a city like Bombay.
I see. It's not just total power, but the intensity and location of the demand.
Exactly. AI data centers, clusters of EV fast chargers, they create these huge concentrated power demands that older grids just weren't built for. Grids were designed for maybe 5–6% gradual annual growth.
Right, not these sudden spikes.
Correct. So you get this fundamental structural mismatch, and quality power solutions like FSD-TEST and HVDC help manage that. If EVs take off even moderately in the next few years, the strain will be immense.
Makes sense. Any other major drivers?
Yes, the high voltage transmission segment itself, 220 kV pay, 400 kV, 765 kV. This is where the barriers to entry are incredibly high.
Why is that?
Utilities demand years of proven experience, like 5, 10 years just for approvals. Why? Because of failure at these voltages. The cost of a shutdown is astronomical, huge economic impact.
Okay, so incumbents have a massive advantage, a real moat.
A massive moat, it essentially creates an oligopoly. Very few players can even compete. New entrants. It takes years, maybe 5, 7 years or more, just to get qualified.
So supply is naturally constrained.
Very constrained. And it's getting worse. This leads to a significant supply-demand mismatch, especially for 400 kV and above. And that demand looks set to last at least a decade.
A decade. Wow.
Yeah.
Okay, one last piece on the industry outlook.
Just the sheer scale of the global market, it completely dwarfs the Indian market.
Example.
They mentioned a single UK framework contract for HVDC stuff valued at £59 billion. That's over 6 lakh crores INR, or roughly 70 billion US dollars.
$70 billion
Yeah.
for one contract framework.
Compared to maybe 10, 20,000 crores for a large Indian grid contract. It just shows the scale they're playing at, which is why their strategy to maintain a 50% global presence across 100+ countries is so important.
Okay, that context is powerful. Huge structural demand, high barriers, massive global market. It sounds almost too good to be true. Which brings us to the key risks. No company grows like this without facing challenges. What are the main ones for Quality Power?
Absolutely, there are risks, and they seem quite aware of them. One, maybe surprisingly, is capacity constraints.
Even with all the demand.
Well, it's not stopping them getting orders in general, but it is limiting their ability to take on the entirety of some of these really huge HVDC projects. They mentioned being able to fulfill maybe only 30–40% of the very largest ones currently.
Right, so they can't capture the full potential of every giant order yet. How are they addressing that?
Their main strategy is backward integration. They're setting up their own factory for CTC that's continuously transposed conductor, a type of electrical magnet wire.
Ah, making a key component themselves.
Exactly. It does two things. Increases their overall capacity and should improve operating margins by giving them more control over the supply chain and costs. Reduces vulnerability too.
Smart. What other risks? Geopolitics? Tariffs? Like U.S. exports?
Yeah, that's always a factor. They said the immediate impact, say, over the next 12–15 months is pretty minimal because orders are largely locked in.
Okay.
Longer term, sure, geopolitics matters. But their big advantage is having a diverse global customer base. If one market gets tricky, they can often reallocate capacity elsewhere. They mentioned a recent big order from the Middle East as an example. They're not short of customers.
That diversification helps hedge the risk.
Makes sense.
What about competition?
It's unique. The big guys, Hitachi, Siemens, GE, are sometimes clients, sometimes suppliers, sometimes partners, and sometimes direct competitors.
Complex relationship.
Very. But Quality Power's position seems secured by those utility approvals we talked about and that long lead time for new entrants in high voltage. They also mentioned competing effectively with Chinese firms on price, and they're focused on building their own internal scale to match that Chinese manufacturing capacity eventually.
Okay. Any specific operational hiccups? Raw materials.
They did mention a specific challenge with getting enough porcelain and insulator sometimes. So, yes, specific sourcing issues can pop up.
And their acquisition strategy. You mentioned Mehu was successful, but any risks there?
Well, they did acknowledge that one potential acquisition, StatCon Energy, was called off previously, but they emphasized they still have a hunger for acquisitions, focusing on tech, pricing, and cultural fit. So they seem disciplined, not just buying anything.
Right. Willing to walk away if it's not right.
Yeah.
One last risk area. Managing the order book itself.
Yeah, they have a strategy for that. They try to maintain about a 12 to 14 month forward cover with their order book.
Why that specific time frame?
It helps them manage risks from volatile metal prices, which are key inputs. It also gives them better visibility for sourcing all the raw materials they need, adds stability.
Okay, so summing up, it really seems Quality Power is in a remarkably strong spot. You've got this structurally growing industry with huge long-term tailwinds. Their financials look solid across the key business segments. Those strategic acquisitions like Mehu and the Sukru JV seem smart, and they've clearly made big strides in technology and global reach.
Yeah, I think the key takeaway here is seeing their shift. They're moving beyond just, participating in the market. They seem to be playing a more defining role now.
Shaping the market, not just reacting to it.
Exactly. They're actively building the infrastructure for the future of power, not just supplying parts for it.
So here's a final thought for you, our listener. The next time you stream a movie that's powered by AI somewhere, or you see an EV charging silently, just take a second to consider that invisible, incredibly complex, high-voltage infrastructure making it all work.
Hmm.
And maybe wonder, what will the world actually look like when this massive building demand truly unleashes itself onto the global grid? And how will companies like Quality Power continue to build that hidden backbone of our electrified future?